let's get to the numbers. Cheryl Casoni with the October jobs report.
You're not going to believe this. 12,000 jobs added. 12,000, wow. Maria. We were looking for 113,000. We haven't seen this number since December of 2020, Maria. 12,000 jobs. Now, the range, I want to be clear, was 0 to 200,000. So economists were all over the place, but 12,000, well off of the estimates.
Cheryl, it has to be the hurricane. It has to be the hurricane,
Yes,
Cheryl.
yes, ma'am. Yes, ma'am. There's two things that Charles, we were talking about, hurricanes and also the strikes that are happening right now. This could absolutely impact it. Let me give you the rest of the numbers and let y'all discuss this. 4.1% is the rate. 4.1%. That came in as expected. Private sector jobs, negative 28,000. Negative. Okay, we were looking for 90,000 added, negative 28,000 on private. Factory jobs, a loss of 46,000 jobs. Government jobs, we added 40,000 government jobs. We were just talking about that. There you go. That was 31,000 last month, I believe. Average hourly earnings, 0.4% to the upside. We were looking for 0.3% there, and then 4%, which is in line year over year for average hourly earnings. Labor force participation rate, 62.6%. But there is the layout, guys. I'm going to see really quick here. I got to get into the report, and I got to look and see if they're going to mention the hurricane. Okay. All right. So let's talk about this. Jobs trended higher in healthcare and government. Thank you. I know. Temporary help services lost jobs. Employment jobs were lost due to strike activity. That is in the report. I don't see a mention of the hurricanes yet, but I got to believe that's a piece of this, Maria. I'm sending it back to you.
Yeah, thank you. We are looking at a market that is trading up, I assume, Charles Payne, because they think this very weak non-farm payrolls number of 12,000 jobs created is going to move the Fed to continue to cut rates.
Yeah, and the first thing you want to look at is the 10-year yield, because that's been the canary in the coal mine squawking loud and loud and loud since that rate cut. It's rocketed higher. It was up slightly before this number. I think it's pulling back just a little bit. To your point, the market wants to see some relief there. But, one thing I will say, and I said when we started this segment, Maria, the consensus had to factor in. Everyone who adds the numbers to the consensus also factored in what they thought their hurricane impact would be. Right. So, you can't say, and again, the range, Goldman Sachs said it would be 50,000. Waller and the Fed said it could be 100,000. But those are factored in already. This is the unmitigated disaster that was probably going to happen sooner rather than later. And I think a lot of folks have touched on it on this panel. It's a red flag going into next year. A lot of these areas have been unsustainable. This government spending, by the way, remarkable. They still found a way to do over 40,000 jobs. That's going to come to an end as well.
Yeah. What do you think, Julia, in terms of these numbers? What would you say is behind such a weak jobs number for the month of October?
I don't think this should be a surprise, and it's not just the effect of strikes and storms. The other issue here is weak seasonal hiring. So October is usually a month in which we add 1 million jobs to the economy due to seasonal employment in retail and transportation and warehousing. The JOLTS report that came earlier this week showed very low numbers of openings for September. For September, this was the lowest retail job opening number since 2011. And transportation and warehousing also very low. And we're seeing a pretty slow start to this holiday hiring season at ZipRecruiter and online job postings as well.
Steve, how do you see things?
I was just looking, Maria, and you may have to verify this. I'm just looking at the numbers myself, and Cheryl may have to verify this, but it looks like there was also another big downward revision. Did I get that right?
Yep, down 31,000 for September.
Yeah. So we just keep seeing this pattern. I got to say, there are heart palpitations right now at the White House and the Kamala Harris campaign. I mean, this is the worst possible news they could get 4 days before an election. You were just talking to Charles about this kind of media circus about how great the economy is. A piece in the Wall Street Journal, the economy is great, and then these numbers come out. One other quick thing. That point that was made a little bit earlier about people not quitting their jobs, that's a really important indicator on how people feel about the labor market, because when people hold on to their jobs, they're very worried about whether they can find a new job. And when you get a report like this, now you know why they're worried.
Yeah, that's true. John Lonsky.
Yeah, I think that lower quit rate tells us that this 4% year-over-year increase by the average wage is perhaps going to slow fairly soon. This is, the lower quit rate suggests that employers are under less pressure to keep increasing wages to hold on to valued employees. Nevertheless, some will voice concern that this 4% annual increase by the average wage will block further progress at reducing price inflation, especially in labor-intensive service industries.
Yeah, we got the downward revision in September. Cheryl, you've got other revisions as well.
So, yeah, August revision is 81,000.
81, yeah.
81,000. So if you combine, and Maria, you mentioned the 31,000 for September. So if you combine that, that's 112,000 fewer jobs that were added between August and September, yes.
Okay, so you got another 112,000 fewer jobs.
Correct.
So these revisions are not doing anything for this storyline that everything's so great, Charles.
Yeah, it's, the headline writers at some of these media outlets, listen, they'll find a way to write this off and say it was hurricane related and all that kind of stuff. But again, I think it's insulting to the American public that are living these numbers. We talk about these numbers and it sometimes dehumanizes the whole thing. These are people who are becoming hopeless in America, particularly young Americans who have given up on the American dream. And instead of dancing around it, we need to find out. And again, I think a lot of this goes back to this notion of pumping in a bunch of money, building a big government, and then bragging about nominal gains such as GDP when it hurts the most people. And one thing you mentioned earlier, Maria, and I just thought about it. This inflation story is not gone. The media keeps talking about inflation as if it's gone, that it was yesterday's story. And every time we use a chart on inflation, we should use the cumulative CPI number, because that's the only number that matters right now to the average American. And it just goes higher and higher and higher at a slower rate, but higher and higher and higher.
Yeah, and Cheryl, the inflation is where specifically? I know you've talked so much about food and shelter being two major issues, but walk us through where you see the biggest issues for the American people right now, because you're talking about the essentials, Cheryl, right? I mean, this is what? Food, energy, and shelter.
Gas, groceries, and also eating out at restaurants. Restaurant prices, from a food perspective, have also jumped higher across the country, and that also affects American families and the psyche as we go into, obviously, an election on Tuesday. But, egg prices are up 160%.
Wow.
Under the Biden-Harris administration. I mean, eggs is such a big staple of the American diet.
Absolutely.
and the kitchen. Ground beef prices are up 30% under this administration. Bread has jumped 24% under this administration. Cereal 22%. Produce 14.5%.
Good points.
Maria, one other one is housing, mortgage payments. You know how much those are up? 97% over the last 4 years. In other words, the average monthly mortgage payment on a new home has almost doubled in terms of what you have to pay. No wonder we have a situation where young people can't afford to buy a home. It's twice as expensive.
Joel, you see a number like this, you see a market reaction like this. Dow Industrial's up 153, had been up higher than 170 on this idea that, well, the Federal Reserve's going to have to move if this is the kind of economic story we're talking about. What do you want to do as an investor? Where are you seeing the flows right now?
Well, I'm still bullish for the remainder of this year. We've got 2 months. Usually the fourth quarter ends on a strong note. Despite the job numbers, and by the way, there were no major surprises in this. The government increased. The biggest increase was government. And we're seeing manufacturing jobs decline. But we are seeing, some companies, particularly the larger tech companies, performing well. Amazon came out yesterday, had really strong results. And so we're seeing pockets of growth in this area. So I'm still bullish in the last 2 months of this year in terms of the markets. Now, to that point, the markets being high probably also contributed to the job reduction, because we're seeing more and more more and more retirements. Got 4.3 million eligible people per year who are eligible for retirement. When the markets are high, as we saw, peaking in periods right before the COVID, kicked into high gear. A lot of people retired when the markets were high. We're seeing that probably again. I think the markets are going to end this year on a strong note. I think the interest rates, to Charles' point, the long bond, the 10-year, is down about 3 bips pre-market. It was up 3 basis points. And so that's going to be encouraging to the point that people are going to think, okay, we're going to get at least 2 rate cuts. I don't see it going 50 basis points in either month. But that seems like it's now solidifying, when there may have been some concern in the last week or so.
Well, I'll tell you right now, Tom Lee at Fundstrat is talking about what Mark Newton, his technician, has said, and that is that the market internals have deteriorated. And Mark Newton has been talking about these internals like volatility and futures market and inverted, yield curve. He says all these market internals have deteriorated, and they were expecting some, rockiness and volatility in the month of October. I'm just wondering what happens now in a new month and into December once we have more clarity on the election. Because, Charles, you know that the election has also been a factor. We know we're not going to know on the night of November 5th.
Yeah.
Like, why not?
That's that's a tough one. That really is a tough one. In the age of AI, in the age of instant knowledge and information, that we're really bracing for an election. And the longer it drags out, the longer it takes for us to know, the greater the pushback, right, in terms of this being a contested election. But I do want to say one thing about, the labor force in of itself and these earnings. Think about what Google said this week. 25% of their code was written by AI.
Wow.
Technology, Challenger and Gray and Christmas, technology by far, they have the most layoff announcements. So, yeah, ironically, the tech stocks probably will regain and have regained leadership, in part because they're able to shed workers. And at some point, so will other companies in this country because of AI. And that's a factor that I don't know anyone can model for 2025, but it's growing every single day.
Well, Julia, you must be dealing with that on the jobs front as well. Technology replacing humans in many areas.
So the big question now is, how can GDP be growing at a steady or even accelerating rate while employment growth is slowing? We have a situation where GDP is actually above the pre-pandemic trend, whereas employment is below the pre-pandemic trend by about 5 million. Now, the answer is productivity growth, which has been tracking about 2.5% and is very high, is unusually high. Now, that's, Charles Payne was talking about the disconnect between economists and workers and ordinary Americans. And, economists think of productivity growth as fantastic. It's the silver bullet that allows non-inflationary growth. But at the same time, it means if you're an entry-level worker, you might find a hard time getting jobs. More of you competing over fewer opportunities. It's great for very high-tech workers, very skilled workers with AI skills. But elsewhere in tech, employment is very, very sluggish. It hasn't grown in almost 2 years.
And that's what we're seeing right here this morning for the October non-farm payrolls at 12,000 jobs created in the month of October versus an estimate of better than 100,000. The Bureau of Labor Statistics says this: it is not possible to quantify the effect of storms on payrolls. Cheryl told us it was the storms as well as other issues here. The strikes is what you said, Cheryl. Mm-hmm. I want to get your take in terms of what that looks like for December. I mean, these strikes were in place in November. The Boeing strike is still on. They're trying to put a new deal in front of machinists right now, right?
Right. No, and that they're not going to vote until Monday, day before the election. So we'll see what the machinists do when they go back. Their union leaders have told them there's probably a very small chance you're ever going to get your pensions back, and that's the sticking point at this point, to be honest, between the two sides. So we'll see what happens on Monday. But no, absolutely. And I was looking for more commentary on the storms, and it really does seem to be, in particular, they say flat out with the manufacturing losses of 46,000, that mostly was because of the strike at Boeing. They flat out say it in the report. So at least we've got some clarity on that.
Well, I mean, Charles, this is one of those days when bad news for American citizens is actually becoming good news for investors, because they see this as a chance for the Fed to keep cutting rates. Dow Industrial's up 200 right now.
Jay Powell is breathing a sigh of relief. Now, it does go to the fact, though, that the Fed, they do have and have access to things. And by the way, you know, the general public, again, the headlines, things are fantastic, things are great. You've got to go through these. You've got to look at everything. I don't think this month is going to be the anomaly, even with the strikes and even with the hurricanes. I think we've learned today that September, that big number in September was the anomaly, and it's going to get whittled down more and more as we go on, and that magnificent number will be less magnificent. And the fact is now the long-term trend is extremely spooky for Americans out there looking for a job.
Well, look at rates falling like a rock this morning. The 10-year Treasury yield is down 5.25 basis points, Charles, and the 2-year is down almost 9 basis points. What about this? I mean, John Lonsky, this has gone in the complete opposite direction that people were expecting. When the Fed started talking about rate cuts, rates actually went up, and with this data this morning, they're plummeting.
Yeah, I think that's good news, you know, for these potential first-time home buyers. At least this latest rise by mortgage yields might come to a halt, but still mortgage yields are going to be a lot higher than we thought what would be the case when the Fed cut rates back on September 18th. And, you know, let's not, you know, forget about the fact that one of the reasons why bond yields took off, why they ascended, was because of these massive federal budget deficits. It's $1.8 trillion that the government is spending in excess of what it's taking in terms of tax revenues. And you have to get this deficit under control. You've got to get government spending under control if you are going to have any hope of ultimately taming inflation and bringing borrowing costs down to levels that would make housing affordable again.
How do you see it, Steve Moore?
Well, you know, when you factor in these job revisions, which were down over the last 2 months by roughly 110,000, what it should say on the screen, it says 12K jobs added in October. That's true. But what this means is that we have 100,000 fewer jobs than we thought we had. That's a really bad number. When you're looking at a situation, to add to what John Lonsky was talking about, where we are running nearly $2 trillion deficits, and the government is the fastest growing sector of our economy, we've got something structurally really wrong with this economy. We cannot continue down this path. There is no plan out of the Kamala Harris plan. I've looked at her plan. There's no plan to cut government spending. They keep adding more and more workers, and I'm sorry, we're growing the economy in all the wrong places. And by the way, I'd love to hear what the numbers were for construction, manufacturing, business services, the things where people actually make things in the economy, because those are not growing at all. This is the worst jobs number we've had, Maria, in 3 years.
Cheryl, what do you say?
Well, I was looking into, Maria, what you had mentioned earlier about the storm impact on the report. I don't have the construction number in front of me, but there's a huge note at the bottom of the report. I don't know if Steve has seen it yet, but it talks about the specific timing of the landfall of Hurricane Helene, which was September 26th, and then the fact that it tracked north into all these other states. And it says this was before the October reference periods for the household and the establishment surveys, but then it goes on to talk about Milton and how that struck October 9th during the reference period for these surveys. So basically what they're saying is, look, there is an impact on that, but because of the way the data was collected and possible disruptions, we may not get more clarity on that until the next report. Maybe they'll do an update between now and then, but that is a possibility from what I'm reading here from the BLS on how the numbers were pulled.
I see.